Welcome to Pep Talk, where we discuss the state of Texas real estate market as it relates to property taxes. Here's your host, Paul Pennington.
This is Paul Pennington, and welcome to Pep Talk. And we have our old friend Lynn is back. He's an economist at the Real Estate Center at Texas A&M University.
Right.
And I'm trying to remember when we spoke last. Were we talking? I don't know that we spoke about the tariffs, did we?
I don't think so. I think that the last time we talked was the fall of 24, maybe.
Okay.
Yeah.
So we didn't.
Yeah.
So we've gone through the tariffs, and you and I were talking yesterday on the phone, and I said a lot of people said when Trump, came out with these hyper tariffs and things that it would cause a recession, and we didn't have a recession. And so now we're down the road, and it looks the Supreme Court's made their decision on the tariffs, and then he's come out and said, well, he has some temporary measure or something where he can have 10% tariffs on everybody. So, and then I mentioned to you that the number of jobs added in 25 was down, right?
Yes, I think so. You're talking about for the whole year?
Yes.
It's a mixed bag, but there was definitely a reduction in the total number of government workers, which has weighed on the total hirings. Yeah.
Okay.
Private sector's been positive.
Okay.
Right.
So we haven't spoken in over a year, and we did not have a recession in 2025.
Right.
The stock market today is kind of sketchy, but we're still up.
Mm-hmm.
Okay. So when you look into I always ask you this, when you look into your crystal ball, you look back on 2025 and January and now almost all of February, what do you see moving forward?
I'm optimistic in regards to the nation's economic growth. I think that a lot of the supply side policies that were implemented last year are coming to fruition. We're starting to see a real strength in the labor market in the construction sector. Healthcare is also a bright spot, but that's been a bright spot for a long time. I say bright spot in regards to net positive employment, but construction is very positive, and that generally is forward indicator for other jobs, because they're building facilities in which people will work. Some will be more labor intensive than others, and we can talk about data centers and how those compare to maybe manufacturing facilities, et cetera. But they're very, very positive. You mentioned job growth in 2025. The most recent statistic for Q4 was net 130,000 new jobs, but that was after subtracting about 41,000 government jobs that were eliminated. And that had been in the works for a long time, that just technically their pay ended. I think it was in September. So, or maybe October. But the point is that the private sector added, I think, 171,000. And so the net was 130. So the private sector is strong, and manufacturing has been fairly flat, but construction, like I said, has been very strong. And I think that will indicate good things for the
Where's
future.
the construction?
Mm-hmm.
It's not. Where is the construction? Is it all the data centers?
That's a lot of it. There's a lot of data center activity, and there's a variety of data center type things, and there's big players, of course, in the market from Google and Meta and Microsoft and Amazon. There's a lot of that going on. Texas is the number 2 state now in data centers, second to Virginia, and Texas is rapidly growing the amount of data centers, large facilities. Not just Texas, there are other states that are beneficiaries of this growth. A lot of states, but for example, I was in Mississippi last week, and I believe it's Microsoft there in the Jackson area that purchased 1,200 acres just outside of Jackson, Mississippi, to build a massive data center.
Well, somebody, I can't remember who it was, but someone built one. You mentioned Mississippi. It was the Mississippi-Tennessee border. Huge one.
Yeah, the Memphis area, I think. Yeah.
Huge one.
Right. And back to Texas, Abilene is a hot spot right now. Yeah.
You mentioned some statistics about that.
Mm-hmm.
Talk about the number of people that are going to be housed there to work on the data
Right.
centers.
So there's currently under construction a 5,000 bed, what they call man camp, for the to support the housing for construction workers. And in addition to that, apparently there's an additional 3,000 RV park in that area. Mostly, I think it's northwest Abilene area. There's Haskell County and another county that are seeing that now. Nobody really saw that coming just a couple years ago, and you can imagine the shock and awe for the local residents and the change in their commutes and that kind of thing if they're on that side of town. But yeah, it's big business, if you will.
Now, there's an article in the Journal today, and I probably have these numbers wrong, but I want to say that in the past, data centers took about 2% of the country's energy, and now that number is just, I can't remember if it was 12% or 20%. And there's all of this talk about, and Trump said something today about data centers, that they were going to have to come up with their own energy sources so as not to put pressure on our existing energy, which would cause the electric bill for an ordinary citizen to go up because we got a huge data center.
Right.
Is that I know that's not your field, but do you see us reaching a balance where you have these huge data centers and they're constructed and they have, in the future, they have their own separate energy sources and it doesn't affect the expense or a electric bill for an ordinary citizen? Do you think that's
I think that's already happening in some areas. In order to speed up projects, they're coming and building their own power plant basically. And it's not just that. There a lot of these things. One of the reasons why I think Abilene, for example, is attracting this is because of the infrastructure for natural gas sources. Relatively cheap land and cheap energy in that regard, and the ability to bring in a workforce like I described, and so on.
Is that why you think Texas is kind of a hub of data centers?
I think that's a big part of it. I mean, Texas is generally pro-business, and so there's a less constraints, if you will, than a lot of other states that allow, time is money, and so it's like a gold rush right now to build these data centers, and in some ways it seems like money is no object. But on that point about energy, there are actually examples where these types of facilities and what they've done with the infrastructure for energy has actually resulted in, or is expected to result in, lower energy costs because of the economies of scale that they're bringing to those markets. And so it's not all bad. I mean, certainly there are valid concerns, particularly in the short run, but it can be a good thing.
Economic question about these data centers. When are they going to start making money?
Yeah, that's the great question.
Because these people talk.
Right.
I had a client come up to me. It's been over a year. And we want you to do a tax estimate on a data center in Indiana.
Mm-hmm.
So we started working on it. And when the conversation first started, it was like, we're going to spend $1 billion.
Mm-hmm.
And then it was $2 billion. Then by the time we finally did this estimate, it was $5 billion. That's chump change.
Yeah.
That is chump change compared to the number. It's hundreds of billions of dollars are being spent.
Right.
And all this money is going into these data centers. When do the investors or the lenders start seeing a return on the investment?
Yeah, that's a great question. And I don't think anybody really knows the answer to that, technically speaking. I mean, it is somewhat reminiscent of, the internet boom in the stock market. There were winners, right? But there were a lot of losers as well.
Do you think the whole the whole data center thing is all about, I guess if you filter it down, it's about AI, right? And so has that been oversold, or Is it the way it's being presented correct, or is it undersold or oversold?
It's hard to say. I mean, there's certainly potential for it having been oversold, but we don't really know yet, and that's sort of it's somewhat of a gamble. I mean, I don't mean that in the loose sense, but I mean like an educated guess in regards to
You know, these
Mhm.
like these companies are. I mean, they're so huge
Mhm.
that
Yep.
I mean, just a couple of them can affect the performance of the S&P
Right.
500. You know, it's
Right.
just there's
I just heard yesterday, and I want to make this point because these people that are spending this money know a lot more about this than I do, or you and I do. But there are at least three of the major companies, at the top of the game here that are spending 100% of their free cash flow toward the build out for this, data infrastructure.
so it
So
kind of infers they know stuff we
there,
don't
it's
know
pedal to the metal. That's right.
that ordinary
There's
citizens
they
don't.
wouldn't go 100% all in
Yeah.
if they weren't extremely confident that they needed to. If they're in a race.
Then what is the effect of all this spending
Hmm.
on data centers and AI and the software that goes, all the stuff that goes into it?
Hmm.
What is the effect of all that spending on the economy?
Well, in the short run, it's extremely positive. I mean, it's a big economic boost because of the construction and the capital investment in plant and equipment and that kind of thing. So it's going to be
You're hiring people.
you're hiring
There's
people, you're
money.
spending a lot of money on infrastructure and on buildings and equipment. All this capex spending. So that's going to be a net positive. It's one of the reasons why I think that 26 and 27 we're going to see GDP growth, over 3%, which is, you know, I say that with a bit of a halting voice because the Fed up until just recently was still predicting for the 10-year run we were going to be under 2% in real GDP growth.
What do economists consider just normal? Two and a half?
2.5 seems normal, and that's certainly been the Fed's view of it. I hope that that's not true, as in that's like the best we can do, because we need to have stronger GDP growth in order to address some of the structural financial problems we have as a country. In regards to our particularly the deficit to GDP ratio that has been getting worse over the past 25 years.
Right,
Yeah.
right. Okay, so back to my original question. So, and I think you just answered. Looking into 26, no recession.
Right.
Unemployment, what number?
I don't know exactly what the number will be, but I don't expect to see major changes in that. I mean,
So below 5%.
right, below 5% for sure. Yeah, I really don't see any reason why we would be um, going much above where we are now, which is a strong labor market. That doesn't mean you're going to see a boom in hiring necessarily. Certainly not across the board. There will be pockets of strength and pockets of weakness and so on, just like we have seen over the last year. But I think gradual improvement, not necessarily to the unemployment rate. There's so much that goes into that I can't predict. But in regards to the overall health of the labor market, I'm positive.
27?
Yeah. I would think 27 is much of the same. I'm very optimistic in the supply side policies that are inviting more capital investment and business, private sector growth. The further you get out, even in 27, though, you do start to wonder, when are we going to start seeing disruptions in the labor market as a result of AI? I think long run, I'm not in the camp that says, AI is going to put us all out of work. I don't believe that at all. I think that it's just going to lead to additional work. It's going to make a lot of things that we do now even more financially feasible, that will, necessitate more people to do other
Let
things.
me ask you this.
But in the short term, there'll be some disruptions.
When I first started my career, you had an adding machine
Mm-hmm.
and you had a bunch of administrative help. And then we had the uh, advent of the personal computer and all the things we've seen with computing
Right.
and that information age, and how that it changed the sizes of staffs,
Mm-hmm.
because where you'd have to have all this administrative backup to do these reports and stuff. It was done by a computer. Will AI be a significant to, let's just say, the white collar workforce as the advent of the computer?
That's a tough question. I mean, I think the answer is yes, but you know, I and if you think about it, right, it's been extremely positive, right? There's a lot of things that machines do for us now, and I think there'll be a lot more things that machines do for us now. But just to put one example on it, when Excel first came out, spreadsheets like that came out, there was a lot of prediction that, well, we're not going to need bookkeepers anymore
Right.
because but the exact opposite happened. We now have uh, a whole new role of white collar workers called analysts, and the reason we have so many more analysts and people using spreadsheets is because it suddenly became financially feasible to do a lot more analysis. And so it was like, well, we want to invest in having people to do more of this because our return on investment as a result of these software tools is greater. And so I think you'll see that kind of thing come out from AI as well, but it'll shift. You think about it this way: you come to work every day and you've got 10, 20, 30, 40 things on your to-do list, whether it's today, this week, this month, or whatever. If AI can replace some of those, okay, great. But then to really move those things forward and to become more productive as a result of them, you're going to need more people to take it to the next step, and so on and so forth. So I think it will. I think it is a big part of the productivity boom that I'm seeing in what I'm talking about in the GDP growth and so on. But I think that it will just create the opportunity to have people employed in different ways to continue to advance the productivity.
We'll see.
Yeah.
There was an article in the journal about way back in the day, 20 some odd years ago. It was a big deal to have an attorney that charges $1,000.
Yeah.
Now they charge $3,500 an hour.
Right.
And the clients are saying, sure, I'm going to pay you $3,500 because you can fix things.
Yeah.
But all that admin stuff, have AI do it. I don't want to pay an associate.
Right.
So we'll see. We'll see how that works out.
Yeah.
Now let me change subjects. In Texas, which is kind of a miracle state, it's our growth and we have that triangle, which is the greater DFW, greater Houston, greater San Antonio, Austin, and within that triangle does not exist anywhere else on this planet.
Mm-hmm.
So everything's going great. People are moving here. And as you know, the governor's come out with a plan. He's running for re-election, and he has adopted various positions, but one of them's on property tax. Mm-hmm. And his plan is pretty extreme.
Mm-hmm.
He wants a 5-year reevaluation cycle. He wants to cap properties at 3%. And then he has a bunch of initiatives about if you want to raise the tax rate, voting and, popular referendums and things like that. And so I was wondering if you had a opportunity to think about his proposition, and do you have any thoughts about it?
Yeah, it seems to have evolved a little bit, as is normally the case with these type things. In other words, it comes out initially, it's big picture, high level stuff, and then as questions get asked, you start to refine, and I see that refinement going more and more targeted toward relief for homeowners, owner occupied homes, homesteads, and so that's similar to what we've been seeing now since 2019, as well as, in addition to that, of course, we've had some other things like rate compression on the school tax and so on. So, it's what I would like to know if I could ask Governor Abbott is what is the ultimate end goal? And I think he's made it fairly clear that his goal is to provide relief. And I think, again, specifically, primarily, not only, but primarily for owner-occupied homes or homesteaders and seniors and so on. And so, from that perspective, then I would, I want to be careful not to come out and say this is, would be a good policy or this would be bad, but to say, does this achieve those goals? And, or are there, unintended consequences that create other problems, or in fact don't even achieve the intended goals. And so, for example, on the appraisal cap side, from my perspective, appraisal caps will not achieve the goal of property tax relief, because the way our system works, which I think is good, the way our system works is that um, we don't. People like to say we have rate limits. We don't really have property tax rate limits, and I don't know that we should. We just have limits on the rate of spending, or the rate of budget growth, if you will, for cities, counties, schools, and so on. And so, the simple math is that the rate is the variable. If values are artificially compressed or held down, but you can still raise this much, the same amount you did last year plus, say, 3.5%, then your formula becomes very simple. It's like, well, how do we solve for that? We have our tax base, and let's say it's artificially compressed, but we can still raise last year's budget plus 3.5%. We're going to back into a rate that equates to that. That is perfectly legal and permissible under the laws and rules that we have in place. So I would prefer to see other things try to accomplish the goal of property tax relief, rather than something artificial like a appraisal cap, because they talk about unintended consequences. Appraisal caps, and it's similar to the multi-year reassessment cycle. While they might sound good on the surface, they create a lot of distortions in the marketplace. So, for example, the longer you're in your home, the greater that benefit is for either one of those deals, whether it's the appraisal cap or the multi-year appraisal cycle. Multi-year appraisal cycle is a little more complex because it resets every, whatever it is, 3 years or 5 years or so on. But the problem is that in the interim period, or during an appraisal cap, for example, you have unequal treatment in side-by-side homes. For example, a first-time home buyer moves in, let's say 3 years down the road after we've implemented either one of those policies, and they're going to be paying property tax based on the current market value of their home, whereas their neighbor, who may be even the same age, same kind of home, will pay a much lower property tax burden for the same services that they enjoy.
When the House came out with a plan to in 23 to cap all values at 5%. And I gave testimony at Ways and Means, and they didn't care.
Mm-hmm.
I mean, that very question was presented. Is it fair for a new couple to come into a neighborhood and buy a house and be assessed at up here,
Mm-hmm.
and all these other people down here? And their fallback position was, well, we're supportive of the generational people, the people who have been there a long time, and so on. And I'm going like, how does that help for the affordability of housing? It doesn't.
Right.
It hurts. And so his other, I didn't even mention this, his other idea was to at least take homesteaded properties off the school, pay school taxes. I think they would. I think in his plan they would still pay M&O, but anyway,
Mm-hmm.
Either take all the school taxes off of homesteaded properties, or a big chunk of it,
Mm-hmm.
which causes issues in itself. I don't know if you've seen what's going on in Florida. Florida are debating in their House. They're debating like essentially trying to take the county and city taxes off homesteaded properties, because the school is already capped in Florida. And so, when you think about this, it's like, okay, I get it.
Mm-hmm.
The goal is to help a homesteaded property, right? Which presupposes those are the people who vote,
Right,
and are going to get us reelected. But there's a lot of people who rent who vote.
right.
Where's the relief for them, and where's the relief to create affordability in housing? I don't. I guess what I'm getting at is anything that you can. There's many goals here. There's tax relief. There's affordability of housing, and anytime, like you say, you do something where you're capping people, and then the new person in town's getting whacked at 100%. That's not fair, and that's not conducive to affordable housing.
And not only that, but there's so many unintended consequences, some of which you've touched on. I agree, they need to be fleshed out. But We do have a affordability crisis, and parts of Texas are worse than the nation, some parts of the nation as a whole. And it's not just because of mortgage rates. I mean, that is
By the
that's
way,
that's a
didn't
part
they
of it.
slip below 6%?
Yeah, so yeah, they did. That national average is below 6%, and but it's the run up in home prices that we had in 2021, 2022. That's a big part of why we have a housing affordability crisis. But when you start to tinker with tax policy like that, you do need to think about like what negatives will this create for economic growth
I
and
totally
attracting
agree, and
people and
I
businesses
think
to our state.
we know what the governor's plan, and there's a governor's plan. The Senate plan is to raise the homestead exemption even more,
Hmm.
which Lieutenant Governor's been doing, and then he wants to bring the over 65 exemption, which freezes your school taxes down from 65 to 55.
Right,
We do not know what the House is going to do,
right.
which is always kind of scary. What are they going to come up with? But I think it is interesting that whatever plan you go with, the governor or the Senate or the House, whatever plan you go with, I think the overriding issue is affordability. Okay, now limiting property taxes contributes to affordability, but we got to think about the new homeowner. We
Right.
got the first time or someone moving up in a house,
Right.
right?
Right.
It's got to be affordable for them
Right.
too.
Right.
So, and I also have an issue with, I was thinking about this. How if do we just want to do we want to give relief just to residential properties?
Hmm.
Okay, so let's say you expanded it and it went from homesteaded properties to rented properties, residential homes that are rented. Well, then when you give a tax break to them, you're giving a tax break to some big corporation who owns most of the rental
Right.
properties.
Right.
So,
I've been asked a few times in the past few years is, if you were to do what you just suggested, would that lead to lower rents? And the answer to that question is, well, it depends on the supply and demand for housing in each individual local market, because
right.
that's ultimately what's going to determine your rent level. Whether or not
you know,
savings like that are passed on, are going to come
the
down to
the
that.
the answer to this property tax thing, I've been listening to the argument of property taxes as a bad thing, and we're renting our house from the government and all this sort of thing. And so maybe the answer to the question is to get to a point where you just say to the municipalities, this is how much your tax rate cannot go over a certain percent. And if you have to provide services for all these other things, those are separate bills.
Mm.
And you just cap it that way and say the tax, I'll pull a number out of there. The tax rate cannot be more than $1.75. Anything else, that you get billed separately or something like that. I think to in my opinion, to finally solve the property tax issue in the state of Texas, which has been going on forever, but to finally solve it, I think what you need to do is you need to take the homesteaded taxpayer out of the argument.
Mm-hmm.
And whatever you need to do, take them out of the argument, and then you can focus on other things. Because, I mean, we're spending $50 billion or $35 billion every session, or no, it's really closer to 50 or 60 because it's over a 2-year period. We're spending a lot of money on property taxes, and if we could come up with some solution where the homesteaded property owner is saying it's kind of flat and I'm not upset about it, then you could concentrate on other things.
Yeah.
But I don't know. I agree with you. I think the governor's plan was like, you don't have to pay school taxes. You're not going to get reevaluated except one time every 5 years. We're capping your increase at 3%. There's a proposition on the Republican. If you go vote in the Republican primary, it's like, if you buy a house, that's the value of that house for 6 years, and at the end of 6 years, we're going to abolish property taxes.
Yeah.
These are the kind of ideas that
Yeah.
are flying around.
There's you said something that overlaps with my thoughts that we were having about economic growth and tax policy and regulate and all the different things, right? And tariffs and so on and so forth. Same principle applies here. The more you try to, um, defy gravity, if you will, defy economic realities, the more they're going to come back and clobber you at some point in the future. And so we can try to suspend reality, but you just cannot get away from the fact that the tooth fairy doesn't really exist, and there has to be sources of revenue
There will
fund.
there will come a day.
Yeah, that's right.
There will come a day when Texas is not the center of the universe.
Well,
I've been here
yeah,
when
no, I
Texas was not
understand. Right,
when we
right,
had
right.
the S&L crisis. Texas was not the center of the
Right,
universe.
right.
It was bad times.
Yeah,
And at some future date, growth might, something
yeah,
could happen. The price of
yeah,
oil or something
yeah.
could happen.
And that's a good point. That's not even where I was going, but I agree with what you're saying. But even if Texas continues to be, the gem, growing, outpacing the national GDP, for example, as we have, you still have to find the funding somewhere, or where's the talk about cutting spending, right? There's very little talk about that. And so nobody really wants to give up the services we have, nor do I think we really want to give up local control
Right.
over schools and police and fire and emergency service,
Right.
all those things, right? We don't want it all to be state run. And so therefore you have to have some local revenue source, and sales tax is a part of it, but really property tax. So if you want to eliminate property tax, we just need to be honest with ourselves about how are we going to get there. We either have to significantly slash spending, or we're going to have to deal with much higher sales tax
See,
rates.
I have a solution for it.
Yeah.
I think we should any county with a population over 1 million should have a state of the art casinos. Something.
Yeah.
And then
Yeah.
you all that money goes for, take a pick, schools,
Right.
and that's just it.
Wasn't that kind of the theory behind the state lottery?
Yes, that was the thing. The state lottery. All right. Well, as usual, we always. By the way, before I let you go, did you tell me you're working on a paper in regards to the property taxes?
So really, my paper, which will come out in the spring issue of Terra Grande that we at the Real Estate Research Center put out, is really to talk about the Texas property tax system. And while we all, have genuine complaints about property taxes and paying them year after year, just looking at the reality of our system, we really have a good thing. I'm not saying it's a good thing to have to pay property tax every year, but the system that we have, when you look at the alternatives and we look at how other states manage property taxes.
It's funny you mentioned, I just had to do a tax estimate for a client that's buying properties in many states, and particularly trying to get a feel for what taxes are, say, in Cook County, Illinois.
Right.
We have the best system in the world.
We do, and
we
it
really
has
do.
to be based on market value.
We do not appreciate it.
We don't, and it's a very tough position. Like, it's not popular for me to come on and say, "Hey, we really have a good property tax system." I mean, like, nobody wants to hear you say anything good about property tax, and I understand where that's coming from. I totally get that sentiment. But when you look at reality and how we're going to fund the things we want to fund and so on, your system has to be based on market value. There's no other way for there to be equity amongst neighbors and amongst businesses, and to have a uniform and equal standard that we have in our Constitution.
They keep and I'm not bashing the House, but the House came up with this plan to this exemption on business personal property, and they said $125,000. And it was my understanding when that bill passed in 25 that the comptroller was going to give out all these instructions how this was going to be administered, and they did not. And so now you have Dallas County saying this is the way we're going to administer it, and another county saying this is the way we're going to. So it's that's kind of a mess.
Right.
But the number of accounts now that are totally exempt on the personal property tax rolls it's like 70% are now off the roll.
Right. Right. And by the way, that's not just small businesses. Right?
No.
That's big corporations that have a lot of small locations as well.
So someone's going to make that up. I get it, you know? And so,
and that goes back to the point I was making earlier about, whatever it is Your rate is determined by your tax base, the taxable value, and your allowable budget, right? And so when you
Shrink
exempt a
the
bunch of
value,
property,
yeah,
you're going to end up raising the rate on
absolutely.
what is remains taxable. And so I'm not saying that's a bad thing necessarily. I'm just saying that's the reality of it. And so we just need to be honest with it and think through, okay, well, if we do this, we get that. And so that's part of my article too, is to try to explain just the functionality of how the system works.
Do you get into the whole controversy over the traveling HFCs or anything?
No, I
Okay.
haven't. No.
That's
Yeah.
that's kind of a
Yeah.
hot topic.
Yes, it is.
Property tax.
Mhm.
Anyway, we always enjoy you coming out. I guess when we get together in 27, we'll find out if your predictions are correct, and maybe by the time I guess by the time we get together, the session will not have started.
Right.
We'll be in the session.
Right.
So maybe we'll have a better feel for where we're at. So anyway, thank you very much.
You're
Enjoyed it. And thank you for joining us.